Are you feeling overwhelmed by the prospect of buying or selling a home? Don't worry, you're not alone. Real estate transactions can be complex, leaving you with a myriad of questions at every turn. Over the next month, I'll be addressing 30 of the most frequently asked questions in real estate to help demystify the process for you. We'll begin by tackling common queries related to selling homes before delving into the intricacies of the buying journey. If you have additional questions or need personalized guidance, feel free to reach out. With my experience of buying and selling homes in the Oklahoma City market, I can equip you with the confidence and insights necessary to navigate the real estate landscape. Welcome to day one of our 30-day real estate series focusing on selling and buying homes. Today we're diving into the crucial question, how do I prepare my home before I sell it? When getting your home ready for sale, the first step is to ensure it's presentable. This involves thorough cleaning and addressing minor repairs. Here are key steps to consider. Number one, deep cleaning. Mop floors, scrub bathrooms, and clean the kitchen to remove grime. Number two, minor repairs. Patch wall holes, replace burned out light bulbs, and fix broken appliances to enhance your home's appeal. Three, neutralize colors. Consider repainting walls in neutral tones like white, cream, or gray to create a fresh and spacious feel that appeals to a wider range of buyers. Number four, depersonalize and declutter. Temporarily move personal items such as family photos and knickknacks to help potential buyers envision themselves in the space. Number five, exterior appeal. Choose exterior colors that complement your home's style and siding materials. Consider matching roof colors with siding for a cohesive look. Number six, check for liens. Verify if your property has any liens and resolve them before listing your home for sale to avoid complications during the selling process. By following these steps, you'll enhance your home's marketability and attract more potential buyers. Welcome back to day two of our real estate questions series. Today's focus is on the timing of selling your home, so let's dive into question two, how long will it take to sell my home? On average, the process of selling a house typically spans between 55 and 70 days, encompassing 25 days on the market and 30 to 45 days for closing. However, in Oklahoma City, the average days on the market were only 15 in 2023, resulting in a quicker overall process of 40 to 60 days. Keep in mind that these timelines can vary depending on several factors. Number one, listing time. Homes often sell faster during peak seasons like spring and early fall. Number two, local market conditions. A seller's market with high demand and low inventory can accelerate this selling process. Number three, home condition. Well-maintained homes tend to attract buyers more quickly than those needing extensive repairs. And number four, buyer financing. Mortgage-based transactions typically take longer to close compared to cash deals. Proactively addressing repairs and setting a competitive price with the guidance of an experienced real estate consultant can expedite the selling process. While some may consider selling without professional assistance, it's crucial to note the potential drawbacks, including limited market reach, pricing challenges, and complex paperwork. For personalized guidance and a free seller's guide, contact me at the phone number listed or visit me at the website listed. Welcome back to day three of our real estate questions series. Today's topic revolves around a crucial aspect of selling your home. What should the list price of my home be? The first step in determining your home's list price is to obtain a comparative market analysis from a knowledgeable real estate consultant like myself. A CMA involves analyzing similar properties in your neighborhood with comparable square footage, number of bedrooms, and bathrooms. While these properties may not be identical, they provide a benchmark for pricing. The analysis includes recently sold homes, understanding what similar homes have sold for in your area, current listing prices, examining asking prices of homes currently on the market, and unsold listings, reviewing prices of homes that did not sell to gauge market trends and buyer preferences. By comparing these categories, we can establish a competitive list price that aligns with market dynamics and maximizes your home's potential for sale. If you prefer a quick estimate without engaging directly with an agent, you can use online home value estimators like the one provided on my page. Welcome back to day four of our real estate question series. Today's topic delves into a common query among homeowners. Why is my home's assessed value different from the market value? The assessed value and market value of a home are determined by distinct factors. The market value is influenced by buyers and sellers in the real estate market. For instance, in a seller's market with high demand and low inventory, your home's market value may exceed its assessed value. Buyers may offer more than the assessed value due to competitive bidding, ultimately determining the market value. The assessed value, professional licensed appraisers calculate the assessed value based on various factors such as property condition, size, location, and comparable sales. However, the assessed value may not always align with the market value, especially during market fluctuations or unique market conditions like a seller's market. In a seller's market where demand outstrips supply, homes may sell above their assessed values due to competitive offers. Conversely, in a buyer's market with increased inventory, sellers may encounter lower offers relative to the assessed value. It's crucial to note that extreme market conditions, such as significantly higher market values compared to appraised values, can sometimes pose challenges during the home buying process, particularly with lenders and loan approvals. Welcome back to day 5 of our real estate question series. Today's topic looks into a commonly asked question among sellers. Are real estate commissions negotiable? Yes, real estate commissions are negotiable both upfront with your seller's agent and during the negotiation process with the buyer's agent. Here's how it typically works. First, negotiating with your seller's agent. You can negotiate the commission rate with your real estate consultant before listing your home. This rate is usually a percentage of the final sale price, such as 4%. Number 2, the buyer's agent commission. When you receive an offer from a buyer's agent, they have agreed upon a commission percentage with their client. This commission will be included in the offer, and sellers may agree to pay all or a portion of it. Discount brokers may offer lower rates, but be cautious as they provide fewer services usually. It's crucial to consider the quality of service and the potential impact on your bottom line when negotiating commission rates. Our company is a full-service brokerage, and we are committed to maximizing your home's selling price. Our services include professional marketing, online listings, social media promotion, open houses, and comprehensive support throughout the selling process. Consider the overall value and services provided by your real estate consultant when evaluating commission rates to ensure you achieve the best outcome for your home sale. Welcome back to day 6 of our real estate question series. Today's focus is on a critical question for sellers. When is the best time to sell a home? The optimal time to sell a home is typically during early spring and summer, particularly from May through August. Research indicates that these months account for a significant portion, approximately 40%, of the total annual sales volume in the real estate market. For instance, in Oklahoma City in 2022, home sales peaked in June following a strong performance in May. Although there was a slight decline in July, sales picked up again in August, almost matching June's numbers. However, as winter approaches and holiday preparations begin, market activity slows down, leading to a decline in sales starting from January. It's essential to note that while sales remain relatively steady through early fall, January experiences the lowest market activity, making it the least favorable time to sell a home. Welcome back to day 7 of our real estate question series. Today's topic addresses a common dilemma for homeowners. Should I buy a new home before selling my current one? The decision of whether to buy a new home before selling your current one is highly personal and depends on several factors, including your financial situation and comfort level with the decision. Buying a new home before selling can make the moving process smoother. It allows you to move into the new home, make necessary repairs and updates to your current home, and stage it effectively to attract buyers. Additionally, it helps avoid the need for temporary housing if your current home sells quickly. Another benefit is the potential to avoid capital gains taxes. By purchasing a new home within 180 days of selling your current one, you may be able to avoid or minimize capital gains taxes. Consult with an attorney for state-specific information. However, buying before selling may also mean managing 2 mortgage payments temporarily, which can be challenging for some households. Ultimately, the decision should be based on what is best for your family and your financial situation. Consider discussing options with your real estate agent and financial advisor to make an informed choice. Welcome back to day 8 of our Real Estate Questions series. Today's topic answers an essential aspect of selling your home. How does my agent get paid when selling my house? Agent fees in real estate transactions are negotiable and typically involve payments to both the seller's and buyer's real estate consultants. As a seller, you'll be responsible for paying your real estate consultant's commission from the proceeds of the sale. Additionally, the buyers may negotiate for you to cover part or all of their consultant's commission during the negotiation process. During the closing of the sale, the closing agents will handle the distribution of funds. They'll use a document that outlines every fee in the transaction and specifies who's responsible for each fee. Fees may be added to one side and subtracted from another, such as property taxes, which are prorated based on the closing date. The closing agents operate an escrow account where they hold money until it's time to distribute it. This includes money from the lender, if applicable, and the earnest money provided by the buyer. Earnest money serves as proof of the buyer's serious intent and can be forfeited to the seller if the buyer backs out without valid reasons. Understanding these payment processes can help ensure a smooth closing and distribution of funds. Tomorrow we'll discuss the typical closing costs that sellers may encounter. Welcome back to day 9 of our Real Estate Questions series. Today's topic sheds light on an important aspect for sellers. How much does a seller pay in closing costs? Typically, sellers incur approximately 8 to 10% of the total sale price in closing costs, which includes the commission for real estate consultants. The breakdown of closing costs for sellers includes various fees. Title search costs range from $150 to $400. Title insurance costs between $1,000 and $4,000. Escrow fees amount to 0.5% of the final sale price. Transfer taxes in Oklahoma are around 0.15% of the final sales price, and prorated property taxes vary based on local tax rates. If you opt to cover part of the buyer's closing cost, you may pay an additional 2 to 5% of the sale price. While this is uncommon in a seller's market, it may be necessary in a buyer's market with more property options for buyers. Understanding these closing costs is crucial for sellers to anticipate their financial responsibilities and ensure a smooth transaction. Welcome back to day 10 of our Real Estate Question series. Today's topic delves into an important financial aspect for sellers. How much of the sales price do I actually get to keep? The amount you keep from selling your home varies, but generally falls between 90 to 92% of the sales price. This includes 5 to 6% for realtor commissions and 2 to 4% for taxes and fees. Several factors can affect the amount you receive. Outstanding mortgage balance reduces your proceeds. Covering buyer's closing costs can further decrease your net proceeds. Buyer's closing costs typically add 2 to 5% to the sales price, although this is less common in sellers' markets. On closing day, the closing agent will disperse funds to all parties involved and provide you with your net proceeds via check or wire transfer. Welcome back to day 11 of my 30 days of real estate questions focusing on selling your home. Today's question, how can I save money when selling a home? To save money, negotiate your real estate consultant's fees or consider selling the home on your own. Realtor commissions have 2 parts, one for the seller consultants and one for the buyer consultants. You can negotiate these commissions, but remember, lower fees might impact marketing efforts. In today's market, quick offers often indicate a well-marketed property. Do-it-yourself selling can eliminate seller commissions, but requires industry knowledge due to legal complexities. Violations like Fair Housing Act breaches can result in significant fines. Consider hiring a real estate lawyer for paperwork handling, costing around $1,000 to $1,500. However, real estate consultants provide that as well as marketing expertise and expert knowledge of the MLS for broad listing exposure. Welcome back to day 12 of my Real Estate Questions series focusing on selling your home. Today's question, should I pay my buyer's closing costs? Paying your buyer's closing costs can be beneficial in certain scenarios. During a seller's market with multiple bids, it's uncommon. However, in a buyer's market, offering this can attract more offers and speed up the closing process. Buyer's closing costs typically cover various fees like loan origination, appraisal, credit reports, and more. Offering to pay these costs can reduce the upfront financial burden for buyers, allowing them to make higher offers or qualify for loans more easily. Additionally, covering closing costs can make buyers more comfortable with the deal, especially if there are minor issues discovered during the home inspection. It's a strategy to facilitate a smoother sale process and increase buyer confidence. Consider market conditions, your financial situation, and the impact on the overall offer before deciding on paying buyers' closing costs. Welcome back to day 13 of my real estate questions series focusing on selling your home. Today's question, do I need a home inspection? While it's the buyer's responsibility to conduct a home inspection, opting for a pre-listing inspection can offer several advantages for sellers. Although it comes with a cost ranging from $300 to $500, the benefits can outweigh the expense. Here are some reasons why a pre-listing inspection might be beneficial. Number one, you discover and address major issues beforehand, potentially avoiding sale delays and increasing your home's value. Number two, choose your own inspector, ensuring thoroughness and accuracy. Number three, potentially set a higher list price if your home is in excellent condition. And number four, encourage the buyer to waive the inspection contingency, reducing the risk of deal cancellation. Although not mandatory, a pre-listing inspection allows you to control the narrative and present your home in the best possible light. Many real estate consultants and lenders also recommend inspections, adding credibility to your property. Welcome back to day 14 of my real estate questions series focusing on selling your home. Today's question, what are common repairs required by lenders? The repairs mandated by lenders can vary based on the loan type, with conventional loans typically focusing on major structural issues like foundation or roofing problems that could jeopardize the property's value. However, Federal Housing Administration or FHA loans often necessitate a broader range of repairs. For FHA loans, common repair requirements may include addressing peeling paint, covering exposed wiring, repairing broken gutters, or adding handrails to stairs. These requirements aim to ensure the safety and habitability of the property, especially for lower-income homebuyers who may struggle with additional repair costs. It's important to note that states and banks may impose their own repair standards, so staying informed about local regulations is crucial. If you prefer to avoid repair expenses, selling the home as is an option. As is sales often cater to investors offering cash, facilitating faster closings. However, they typically result in lower sale prices compared to homes that undergo inspections and repairs. Welcome back to day 15 of my real estate questions series focusing on selling your home. Today's question, how can a real estate consultant help me sell my home? A real estate consultant brings invaluable expertise to the table, starting with a deep understanding of your local area and how your home compares to others on the market. We provide complimentary monthly home analyses, giving you insights into your home's value and its standing among similar properties in the vicinity. Through comparative market analysis reports, real estate consultants offer informed guidance on pricing your home optimally, maximizing offers, and speeding up the selling process. We handle all the necessary paperwork, leverage local media and social platforms for effective marketing, and organize engaging open houses to attract potential buyers. The support of a real estate consultant extends beyond the listing phase. We offer access to a network of professionals throughout your selling journey. Whether you encounter a plumbing issue post-move or need assistance with other services like title companies, lenders, or photography, our network ensures you have reliable connections for every requirement. For personalized assistance or further inquiries, call me or visit my website to kickstart your buying or selling journey. Let's maximize your home sale together. Thank you and have a great day. Welcome to day 16 of my real estate question series, focusing today and through the end on buying a home. Today is the initial step for buying a home. The first step in the home buying journey is to check your credit score. A credit score of 750 or higher signals financial reliability to lenders, increasing your chances of qualifying for loans with lower interest rates. Factors like consistent on-time payments, diverse credit types, and long-term borrowing history contribute to a high credit score. Different mortgage lenders offer varying loan options based on credit scores. A high credit score of 750 or above opens doors to favorable loan terms and lower interest rates. Good credit, 700 to 750, 749, still offers decent loan options. Consider boosting with a substantial down payment. Fair credit, 650 to 699, loan options are available but may require more effort to qualify. Poor credit, 550 to 649, this is a challenging range with limited loan options. Explore FHA, conventional, or VA loans carefully. An FHA loan is ideal for first-time homebuyers. There's no minimum credit score as long as you meet all the requirements. FHA loans may have down payments as low as 3.5%. Be prepared for higher insurance premiums due to lower credit scores. A conventional loan offered by Freddie Mac or Fannie Mae lenders, these loans typically require a credit score of 620 and above, with varying down payment requirements and private mortgage insurance for down payments less than 20%. VA loan, specifically for military personnel and spouses, most lenders require a credit score benchmark around 620 and may not require a down payment, although fees can be wrapped into the loan amount. When applying for a loan, avoid making major credit purchases or closing credit accounts to prevent negative impacts on your credit score. Welcome to day 17 of my real estate questions series, focusing today on the timeline of buying a home. The average home buying journey takes around 4.5 months from choosing a home to making an offer. After your offer is accepted, the process typically takes another 30 to 45 days to finalize, considering steps like home inspection, appraisal, title search, mortgage finalization, and reviewing closing documents. Several factors can influence the duration of buying a home, including property location, market demand, economic conditions, and individual variables. To expedite the process, partnering with an experienced real estate consultant is invaluable. They help you streamline options, negotiate with sellers, and navigate complexity efficiently. Once you have a negotiated sales contract, closing on the loan involves 5 key steps. Number 1 is the loan application. Number 2, documentation and processing. Number 3, property appraisal. Number 4, underwriting. And number 5, closing. While these steps take time, proactive preparation can prevent delays. However, certain actions can slow down the process, such as being unresponsive to lender requests, not having paperwork organized, skipping pre-approval, unexpected issues in underwriting, forgetting homeowners insurance, or encountering low appraisals. Welcome to day 18 of my real estate questions series, addressing today's question, can I back out of buying a house? The short answer is yes, you can back out of a home purchase, but it may result in losing your earnest money. Earnest money serves as a security deposit given to the seller upon signing a contract. State laws dictate refund conditions and when sellers can retain this deposit. If you withdraw from the contract without a valid reason, forfeiting earnest money is likely. Backing out of an agreement without a legitimate cause can lead to legal consequences as well, as outlined in the purchase agreement. This document specifies crucial details like seller responsibilities for repairs and contingencies for the real estate deal. It delineates under what circumstances you're legally permitted to withdraw from the deal. However, certain scenarios justify breaking a purchase agreement. These include losing employment, inability to sell your current home, or facing mortgage approval challenges. It's prudent to wait until achieving financial stability before proceeding with a home purchase. Issues related to the property, such as failed inspections, unresolved problems, or title transfer difficulties, also warrant reconsideration of the agreement. For instance, if a survey reveals encroachment on a neighbor's land, rectifying such issues is crucial to proceed with the purchase. Welcome to day 19 of my real estate questions series, diving into the negotiability of real estate prices. In the world of real estate, prices are indeed negotiable, but success hinges on understanding market dynamics and seller motivations. For instance, in a seller's market characterized by high demand, lowball offers risk missing out on desired properties due to competitive bidding. During early 2021, the average U.S. home cost was $403,600, a figure that might seem daunting. However, mastering negotiation tactics empowers buyers to secure favorable deals without compromising on their ideal homes. Consulting a skilled negotiator enhances your negotiating prowess, ensuring your offers stand out while aligning with market trends and buyer demands. This expertise aids in navigating negotiations to reach fair price agreements beneficial to both parties. Upon offer acceptance, engaging a certified home inspector becomes pivotal. Inspection findings can serve as leverage for renegotiating prices or requesting repairs before closing. Skilled negotiators, like real estate consultants, facilitate this process to ensure issues are addressed without jeopardizing the deal. Welcome to day 20 of my Real Estate Questions series, where we delve into the strategic timing of home purchases. Timing plays a crucial role in securing the ideal home at the right price. Understanding market dynamics and seasonal trends can significantly impact your home buying experience. Analyzing past data, April emerges as a peak month for new listings, offering a diverse range of options. Conversely, November presents opportunities for favorable deals, with sellers often reducing prices as the year winds down. August stands out as a sweet spot, blending lower prices with abundant housing choices. Sellers keen to close deals before summer's end often offer price reductions, making it an opportune time for buyers. In Oklahoma, early year purchases are typically advantageous. The state's active months span from April to June, providing ample inventory for negotiation and potential discounts on sale prices. Expert real estate consultants at our company can guide you on leveraging these seasonal advantages for optimal home purchases. For National Buyers Day, Christmas Day, and Easter Sunday are noted as prime house buying days, although those patterns may vary by region. Welcome back to day 21 of our real estate exploration, where we tackle the strategic decisions of home selling and buying. Today's question: should I sell my home before buying a new one? This question hinges on your current progress in the home search process. Selling your home first offers certain advantages, but also comes with logistical considerations. If you sell your home before finalizing your new home choice, you may face the need for temporary accommodations like short-term rentals or staying with friends or family. This could involve moving twice or incurring storage costs, impacting your convenience and budget. However, selling your home beforehand empowers you with a substantial down payment for your new purchase. This financial leverage enables you to make competitive offers without exceeding your budget constraints, potentially securing your dream home. Moreover, not feeling pressured to accept an immediate offer on your current home allows you to wait for favorable terms. Once you receive an offer aligning with your expectations, you can confidently proceed with your new home search. For personalized strategies and expert guidance on navigating the home sale and purchase process, consult a seasoned real estate professional. Welcome back to day 22 of our Real Estate Question and Answer series, focusing today on understanding the payment structure for real estate consultants during home purchases. Today's question: how does my real estate consultant get paid when buying a house? Real estate consultant compensation is typically intertwined with the sale price of the home, dispersed at the closing of the transaction. Commissions are commonly structured as a percentage of the sale price or a predefined fee divided among various parties involved, such as the listing agent, listing broker, buyer agent, and buyer broker. The negotiation of commission rates is flexible and subject to agreement between parties. Generally, an agent receives a portion of the total commission, often around 1/4, though this can vary based on the terms set during negotiations. For instance, if the total commission agreed upon for a home sale is $12,000, each party involved might receive $3,000, including the listing broker, buyer's broker, listing agent, and buying agent. The party responsible for paying the agent's commission can vary. It may be the seller, the buyer, or a combination depending on the negotiation terms outlined in the contract with your real estate consultant. Welcome back to day 23 of our Real Estate Question and Answer series, where today's focus is on understanding the closing cost incurred by buyers when purchasing a home. Today's question: how much does a buyer pay in closing costs? Buyers should budget for closing costs, typically ranging between 3 and 5% of the home sale price. In 2020, the national average for closing costs, including taxes, was $6,087. These costs encompass various essential items, including but not limited to loan origination fees, approximately 1% of the loan value, mortgage application fee, $25 to $150, appraisal fee $300 to $1,000, points on the mortgage which vary, wire transfer fee $10 to $50, private mortgage insurance application fee which varies, lender required home inspection fees $300 to $1,000, credit report $30 to $50, survey fee $85 to $600, prepaid homeowners insurance, mortgage interest, and property taxes, which varies, lender title insurance around 0.1% of the home sale price, mortgage transfer taxes, which varies, and buyer's agent commission, which may be negotiated with the seller. Additional costs may include real estate attorney fees, pest inspections, or natural disaster certifications depending on the location and specific circumstances. Buyers can negotiate with sellers regarding the responsibility for covering closing costs, bearing in mind seller contribution maximums imposed by mortgage type guidelines. Closing costs are settled during the home transfer process, commonly known as settlement, occurring on the specified closing date outlined in the purchase agreement. Welcome to day 24 of my real estate question and answer series. Today's focus is on saving money when buying a home. Are you wondering how to save on your home purchase? Let's explore some smart strategies. Number one, explore financial programs. Check eligibility for FHA, FMHA, or VA loans, especially if you're a first-time buyer. These programs often offer favorable terms and down payment assistance. Number two, use down payment assistance. Numerous programs like the Oklahoma Housing Finance Agency provide assistance for qualified buyers. You may receive loans up to 3.5% of the loan cost, interest-free, saving you significant money. Number three, consider VA-backed loans. If eligible, VA loans can waive the need for a down payment and often offer better terms than traditional loans. Number four, save for a 20% down payment. Financial experts recommend aiming for a 20% down payment. This avoids private mortgage insurance costs, which can add up monthly. By leveraging these options, you can save substantially on your home purchase. Welcome to day 25 of my real estate question and answer series. Today's topic is about earnest money. Earnest money, often called a good faith deposit, is typically 1 to 3% of the home's purchase price. It demonstrates to the seller that the buyer is serious about the transaction. Once paid, earnest money is held in escrow, managed by a third party until the sale is finalized. At our company, we entrust the earnest money to the title company, where it's kept separate in an escrow account. If the buyer backs out due to an agreed upon contingency, like loan approval, issues, or unforeseen circumstances, they receive their earnest money back. However, if they withdraw for other reasons, the money goes to the seller. Examples of refundable situations include loan denials or unexpected job loss. Welcome back to day 26 of my 30 days of real estate questions. Today we'll answer the question, what is title insurance? Title insurance protects homeowners from claims against their home that occurred before they purchased it, such as a prior owner's failure to pay taxes or fairly compensate contractors. If you have title insurance, you're covered for legal fees or title disputes that may arise during your home ownership. For instance, if a roofer attached a lien to the home 5 years before you bought it, that lien could hinder you from selling your home in the future. Title insurance ensures that there are no such liens when you buy the property. If the title insurance company missed that lien, they would be responsible for paying it. In some states, title searches only go back to the last previous sale. However, in Oklahoma, each title search goes back to the property's first sale. There are two types of title insurance. Lender title insurance is typically required when selling a home, protecting the lender from any claims on the house. Owner title insurance is optional but recommended. This one-time fee protects you from unexpected title issues for as long as you own the house. Purchasing both insurance policies is usually advisable, with the combined cost being about 0.5% of the home's purchase price. Welcome back to day 27 of my 30 days of real estate questions. Today we'll answer the question, how much of a down payment should I make on a house? Making a down payment of 20% is ideal because it helps you avoid paying private mortgage insurance or PMI. PMI is required for all buyers who owe more than 80% of the home's appraised value. If you can't afford 20%, most lenders still typically require a minimum deposit of at least 3% for the sale to proceed. Depending on your location and mortgage eligibility, some lenders may require a minimum down payment of 5%. There are special programs available for first-time buyers, veterans, or rural residents that may eliminate the need for a down payment. Keep in mind that monthly payments are based on the total loan amount. Financing 100% of the loan will result in higher monthly payments. For example, on a $200,000 house with a 5.75% interest rate on a 30-year loan, a 20% down payment or $40,000 would lead to a monthly payment of $1,184 before taxes and insurance. With a 3.5% down payment or $7,000, the monthly payment would be $1,561, and with no down payment, it would be $1,609, both requiring PMI. So the monthly payment for a home with no down payment results in monthly payments that are $425 higher than with a 20% down payment, in addition to the PMI required. Welcome back to day 28 of my 30 days of real estate questions. Today we'll answer the question, how long then can the seller take to respond to my offer? Sellers typically have about 72 hours to respond to an offer, although this time frame may vary by state. However, if a bank is selling a home, the response time can extend to several days or even weeks. If you submit an offer and receive no response, it may indicate that your offer was perceived as too low. Some sellers deliberately refrain from responding to convey their displeasure with the offer. While real estate consultants are required to inform sellers of all offers, sellers are not obligated to respond. In case of no response, it's advisable to ask your real estate consultant to contact the seller's consultant. This ensures that your offer was presented and allows you to understand the reason for the lack of response. To enhance the chances of your offer being accepted, your local real estate consultant can assist in striking a balance between a reasonable cost for you and an attractive price for the seller. They analyze recent sales of similar homes, current listings, and unsold homes alike. Market conditions, whether favoring buyers or sellers, are also considered to craft an appealing offer. Welcome back to day 29 of my 30 days of real estate questions. Today we'll answer the question, why do I need a mortgage to buy a house? While it's true that you don't need a mortgage if you have enough cash to purchase the home outright, most people rely on mortgages as a vital tool to achieve home ownership. Being pre-approved for a loan can expedite the underwriting and buying processes, helping you move into your new home sooner. During the underwriting process, loan underwriters evaluate the 3 C's: your credit history, your capability to repay the loan, and collateral. A positive payment history, a good credit score, and a steady income can lead to a quick turnaround time of just a few days for loan approval. Once your loan application is approved, you'll receive clear to close status. At this point, your agent will guide you through signing closing documents, making the down payment, and transferring the home's title to you. Welcome to the final day of my real estate question and answer series. Today, let's explore how a real estate consultant can assist you in buying a house. Number 1 is expert guidance. A buyer's real estate consultant helps you find homes within your budget and preferences. Number 2, efficient scheduling. They arrange visits to houses you like, making the process smooth and convenient. Number 3, skilled negotiation. Top consultants negotiate with sellers to get you the best deal possible. Number 4 is market insights. With in-depth knowledge, they narrow down options, saving you valuable time and money. Number 5, early opportunities. They may even hear about potential properties before they hit the market officially. Number 6, peace of mind. An experienced consultant eases the overwhelming process of home buying, providing daily communication and support. Number 7 is resourceful assistance. Our company offers valuable resources to ensure a pleasant home buying experience. There are several key questions you should ask your real estate consultant. How long have you been a real estate consultant? Are you available to prioritize my needs? What's your track record in negotiation? What services do you offer? Why should I choose to work with you? Can you provide references? Since 2024, you can't look at a house without having a buyer's agreement filled out and signed by you and the buyer's agent. The only exception to this is for open houses. You may not need a buyer's agreement to visit an open house. The seller's agent can serve as your buyer's agent, but just remember, the seller's agent has a fiduciary responsibility to the seller, which means that the seller's agent will do whatever is best for the seller and not necessarily what is best for you. A buyer's agent will have that fiduciary responsibility for you and not for the seller. Thank you for joining me on this real estate journey. If you have more questions or are ready to start the buying process, feel free to contact me at 405-401-0099 or visit my website. Good day and happy home buying.